Good morning, all. Welcome to the Daily Market Podcast with me, Sudeep Shah. We would be discussing today on how the Nifty and Bank Nifty indices are shaping up and what stocks and sectors should be on our focus for the day as well as for the next few sessions. Now, if you see the price action yesterday, Nifty gained 0.34% for the day, while Bank Nifty ended the day on a flatter note. However, it was the Nifty Real Estate Index, Nifty Auto, as well as the IT, which were the best performing sectors, which gained anywhere closer to 0.8 to 1% apiece. And there was a clear dominance. If you see yesterday and day before yesterday, there was a clear dominance over mid caps by large caps. Now, last two sessions, if you see, we have seen clear selling pressure or distribution in some mid caps as well as small caps, while large caps have been able to hold to their support zones and even pull the indices higher. So I feel this trend for the next few sessions could continue and we should be focusing more on large caps. Now coming to the global markets, S&P 500 has once again displayed strength and it is holding above 5050 levels. And what is more encouraging is that despite the last few days of consolidation, it has not even breached 5000 zone on the downside for a single time. So I feel going forward till 4970 5000 zone holds, S&P 500 could continue its bullish momentum up to 5230 5250 in the next few sessions. Now, having a look at the dollar index and the US 10-year bond yields, both are quite stable since last few days. But a cause of concern could be from the Brent crude oil prices. Now, they are trading closer to $82 a barrel. And this particular index, Brent crude oil prices, they have been trading in a range between 78 and 80 to $83 a barrel since last several sessions. So any move above $83, crude prices could further strengthen up to $87 $88. So this would be sentimentally negative from the Indian context. So this needs to be on radar. Volatility index, if you see, despite the indices being in a range or some kind of traction witnessed in large caps and indices closing 0.3% higher, India VIX also closed marginally 1% higher, closer to 15.7 15.75 levels. Now important levels for VIX on the upside will be 16.3 16.4. If this zone is crossed, then we could anticipate further expansion in volatility. So this level needs to be closely watched. Now coming to Nifty, going forward, indices are likely to witness support around 22,100 22,120 zone, while the immediate resistance on the upside could be around 22,220 and 22,240 zone. So in case this zone of 22,250 is crossed, further acceleration of momentum up to 22,330 to 22,400 levels could be witnessed. Now there could be a clear short covering move in case this 22,260 is crossed, and the way large caps are performing in the last few sessions, we feel that this could be a likelihood. The put call ratio for Nifty is stable at 0.9 levels. And if you see the options data, the option writing data, the meaningful call writing was witnessed across 22,200 as well as 22,300 strikes, while on the put side 22,200 and 22,000 strikes have witnessed significant open interest addition. So this implies that the range for the next few sessions could be 22,080 on the downside and 22,350 on the upside. Now coming to Bank Nifty, now this index virtually closed flatter yesterday. So immediate support for Bank Nifty remains the same like it was yesterday. So the support zones are closer to 46 300 46 350, while the resistance zone is placed between 46 800 and 46 900. Now this is the zone exactly where the 50 DMA is also placed. So that is now acting as some kind of a resistance. In case 46 300 is broken, indices can retest its next support zone placed at 45 800 45 900. However, on the crossover above 46 900, short covering move up to 47 200 47 300 could be witnessed. Looking at the option writing data, significant call writing is visible at 46 800 47,000 strikes, while 46 500 and 46 600 puts are also showing some kind of a decent build up. So this implies the short term range for the index could be 46 300 on the downside and 47,000 on the upside. Now, coming to the sectors and stocks which are in momentum. Now, as we discussed earlier, also there was a clear shift of momentum from the mid and small caps to large caps, with mid cap index clearly witnessing pressure from higher levels and large caps being able to support the indices on every dip. Now, within the large caps, also, if you see Nifty Auto yesterday has witnessed a fresh up move with the likes of Tata Motors, Eicher Motors, and Maruti displaying robust momentum. And we expect this momentum to continue going forward also, because if you see all these stocks, there is fresh long built up visible yesterday, as well as at higher levels also. The volume breakout also is visible, so keep eye on these auto names. They could still continue doing well in the next few sessions. Apart from these autos names, from the broader market, bullish setups were observed in TCS, Power Grid, Sun Pharma, Cipla, M&M, Grasim, L&T, ICICI Bank, Nestle India, as well as Tata Consumer. So all in all, if you see, these are all large cap names which could do well in the coming few sessions. Coming to the FII and DII data, in the cash markets, FIIs have sold closer to 1510 crores, while DIIs have bought to the tune of 2861 crores. FII's long short ratio for the index futures is stable around 45-46%. And if you see the stock futures data, yesterday FIIs have sold closer to 15,000 contracts, while on the options front, FIIs have bought 37,800 call option contracts, and they've even bought closer to 18,800 put option contracts. So, friends, that's about it for today's podcast. Thank you all for regularly listening to our podcast and giving us so much love and support. So, all the best for today's session, and thank you all once again.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.